Good morning from Los Angeles. It's Alyssa Corum and Ed Carson here with your market update. On today's show, we're taking a look at Salesforce, Veeva, Microsoft, and Burlington stores. But first, let's check in with the major indexes. Right now, we are up slightly across the board. We have the Dow leading the gains, up about 0.4%. The Nasdaq is up about 0.2%, and the S&P 500 is up 0.1%. So looking here at the chart of the Nasdaq, you know, we are starting to see a little bit of gains here in a row.
Yeah, it is.
Which is a good sign.
A little momentum, though the market is off its intraday highs. I can imagine investors being a little cautious. Fed Chief Jerome Powell speaks today at noon. You know, there's been some hints that the Fed is less likely to be raising, you know, might be a little backing off, and President Trump came in and attacked Powell more personally last night. So there's a lot going on, so people will be focused on that. That could be a catalyst one way or the other for the market going forward.
All right, so we will definitely keep track of market conditions for you. But looking at some individual names, starting off with Salesforce.com, that stock is up over 4% in heavy volume today, trying to retake a key level, but hitting some resistance there. We have the earnings report here with earnings up 45%, and then we also have. Sorry, I don't have the sales there, but strong earnings gain.
Yeah, it was nice action. The revenue guidance for next year is really strong, and that was one reason why the stock was up. You know, it came up toward its 50-day line. It had gapped above its 200-day, but now it's fallen back below that. I mean, you can see, you know, Salesforce, which had been really strong, the software sector had been really strong. You know, they all came down really sharply with the correction. They haven't really bounced back. And this would be a positive, not just for Salesforce, not just for the sector, but also for business IT spending. There's been some concern with the slowing economy worldwide that could be a pressure. So this was a positive.
That's right. And I mean, if you look at the stock before the recent sell-off here, it was one of those just slow and steady climbers. So perhaps if we can see the chart start to repair more, potentially a new base and 5-point can form.
Yeah,
but until then.
Until then.
All right. And now we want to take a look at Veeva Software, which is issuing its quarterly report after the close. And analysts are expecting earnings to rise 88% as revenue rises 32%. Now, that would be acceleration on both the top and bottom lines for the software stock.
Yeah, this medical software stock, it's done really well in the last few months, you know, and like in the last few months as a company. The stock has come back. You know, today it bounced on Salesforce, bounced with the market, but it hit resistance at the 50-day. And again, there's going to be resistance. These stocks sold off. There's a lot of people who may be trying to get out now, thinking, oh boy, I've recouped some of my losses, or I want to, you know, some of my gains have come back. I want to get out. There's a reason why we look at these moving averages, and you know, Salesforce and Veeva are a couple examples. And you know, we do actually have more software companies coming out later this week.
That's right. So we definitely want to see Veeva potentially retaking that key technical level on the report, and we'll have those results for you after the close at investors.com. And we also want to check in on the technical action for Microsoft today. That stock, you know, almost similar to Veeva in that it is nearing its 50-day line as well. It's shaping a double bottom base, and it's up 1.2% today. Yeah,
I wasn't sure if it was a double bottom or if it's a flat base, because it's one of these small enough to know I think what's up to interpret it. It's really been acting well. If you certainly look at the relative strength line, that is clear. It never really sold off in the correction. It sort of looks like it's done relatively well here, and it's at a new high today. It actually passed Apple. You know, in market cap today. It's been flirting with that, and you know, obviously it's just barely above right now. But it's definitely been holding up well, where a lot of other big techs have struggled. The growth has accelerated, certainly on the revenue side and also on the earnings. So this is definitely one to be looking at if we get a follow-through day and it actually breaks out of a base.
Right, so whether it's that middle peak there or for the earlier entry or the left side high, if you're considering it to be a flat base, that relative strength line is at a high and much higher than it was when the stock was hitting that all-time high before the October sell-off.
Yeah.
So that's something good to look at. And we also want to take a look at Burlington Stores moving on its quarterly earnings report, with earnings up some 73%, some nice acceleration there. It too is also nearing its 50-day line, but this one is after the stock touched its 200-day and ultimately failed from breaking out of a cup base.
Yeah, this was one of the disappointments in the last few weeks, with a lot of retailers just sort of really breaking down. Burlington's peers, TJX and Ross stores, had sort of mixed results and weak guidance, and that really hit Burlington. So this is positive, but it's got a lot of damage. A lot of stock charts are damaged. I mean, really the stock market, the major averages are well below 50-day lines, 200-day lines. It's just, even if we get back, there's going to be some breakouts. We're seeing some stocks, American Express breaking out, United Health hitting a new high, but still a lot of stock charts are damaged. And so you want to see this, if it can come back over time, set up a new base, but it's encouraging seeing somebody actually having a good reaction to a retail
report. All right, everyone, that is it for now, but be sure to head to investors.com throughout the trading session and after the close for all the latest market news and analysis. And you can also catch our content across social media, from Facebook to Instagram to YouTube and Twitter. Thanks for joining us. We'll see you right back here tomorrow. All right, guys, my earpiece thing came disconnected right before we went live, so I can't hear you, but I think we made it through.
It was good timing.